All right, what's up, traders? I'm here from the Darkside family, and it's been a little while. It's been a little while since I spoke with you guys. Been out and about, but I figured why not start this week off? New week. We're in December, fun month. Why not start it out with a nice dollar analysis for you guys? All right, the way I look at it. Now, let's just take a look. We're looking at the dollar, right? And if you watched our previous videos on correlation, you have an understanding of how I look at the dollar compared to the other U.S. major pairs and how I try to, make the two of them work when it makes sense, because again, if you think you're going to just look at what the dollar's doing and then go ahead and apply that to EU, it just doesn't work that easily. But let's just get up to speed on where the dollar is right now. Pretty simple to see the play that just took place. Unfortunately, as usual, it looks like Smart Money Concepts was on the table for, well, on the chopping block rather, to have their heads ripped off. What I mean by that is you can see the ascending, higher highs, higher lows, higher highs. You can see the order flow. Everybody saw the break of structure to the upside right here. Everybody saw the order block right here. Everybody saw the reaction right here, the bullish push. Okay, we're long. They saw the retest. Okay, let's buy. You can see the reaction where they came to buy right here, and then they've just had their heads ripped off. So unfortunately, it looks like the algorithm was after Smart Money Concepts again. And again, we have nothing against any concept or something. You just have to understand, that algorithm. It's based on volume. Where the money goes is where it follows. So everybody wants to trade order blocks. Oh, you kind of know what's going on with that already. So, but just to illustrate that, let's just kind of mark it out. And again, this is just going to kind of get you guys up to speed with what I mean and what I'm talking about. So again, you can see the reaction, and if we go to lower time frames, it'll make more sense. Lower low, lower high, lower low, break of structure right here. Okay, into the order block, demand level, whatever you want to call it. Buyers get in. Long positions going where? Right here. Stops go where? Below what? Right here. Stops go right around here. So you would know that's why price comes down and take them out. So unfortunately, that's where the market is right now. But let's talk about exactly where it is right now. Okay, forget about the manipulation, the frustration. Let's just actually start the whole thing all over again, just like the market does, right? So we're just going to simply move from this order block. Let's just try to gamble on this one, all right? That's the idea. So here's the next order block or imbalance or whatever it is that you want to call it. Demand. It really doesn't matter, guys. Depending on how you trade or who you follow is what you're going to call it. But you should really start calling these things what you see them as, because it'll make more sense to you that way. Because if this is an order block, okay, that the idea is that the banks are placing their orders here. What banks? Okay, what banks are placing their order in this order block? And there's millions of banks all over the world that are all competing. They're not all working together. They're all competing. So I don't understand why people would think they're all putting their orders into the same block or whatever the thought process is behind this. But regardless, what a lot of people are seeing is they're seeing something very simple. They're seeing this the sweep of liquidity into the zone right here, right? They're seeing the sweep, liquidity, the strike of the order block, and now what's happening, guys? Think about the timing. Okay, I'm in New York time, so it's just about to be 8 a.m. So we're coming across New York Open. We're getting ready. We're almost into the London New York overlap. So what does that mean, guys? Think about what that means. That means that everybody is sitting at their desk, right, with their hot cup of coffee, and they're ready to trade. Monday morning, they're ready to trade. They've got their money ready. They just opened their prop firm account, whatever it is. They're ready to go because they think it's their time to get into the market and make money. But as we all know, at least the more experienced traders know, that's not how it works. You do not take money from the market. You wait for the market to give you money. Okay? So it's no surprise that you see reactions like this happen during very, very high let's call it high probability times. And the high probability is that there's a lot of traders in front of their computers right now. That's definitely the case. There's a high probability chance that there's many people looking right now at the computer, looking to get into the market just like we are. So that's why they wait and they strike the order blocks or the imbalances or what you could call it a structure, higher high, higher low, higher high. You can call it whatever you want. But that's why they strike it right around this time, because they want everybody to have the opportunity to do what? To be first, to place their orders in and to take their time and get in the market and go to the low time frame, wait for it's funny because some people right now are probably waiting for a 1 minute break of structure. Other people are waiting for a 1 hour break of structure. Some people are waiting for what? Maybe a doji candle. Other people are waiting for what? Maybe a bullish engulfing. Everybody's waiting for their own thing. So it's like it doesn't matter the strategy you're trading or how you approach the market. Everybody's looking for the same thing. Okay, and what does that do? That just creates liquidity, which is perfectly fine. So a reaction. I like to call these reaction Mondays, and that's exactly what it is. Now, here's the thing, guys. It doesn't matter who you are or how you trade or what you think you know. There's no proof or there's no telling of what's going to happen next year. There's no way that anybody knows that if the market's going to continue to the downside or if it's going to push up to here. And you know what, guys? That's perfectly fine. It's actually okay to not know. You want to know why? Because you don't have to place a trade right now. You can do what? You can just be patient. You can be patient, okay? I talk about that in so many videos. It doesn't take rocket science. Why? This is a gambling situation. I don't know. I've been trading for a very long time. My partner traded for a long time, and I guarantee, I can guess and say it's going to go up, or I can guess and say it's going to melt through. But what does that really do for me in something where you're trying to generate consistency? What does that do for you? It does nothing. This is trying to be right. This is trying to be right. And what do? You justify why you're right. Sweep of liquidity, order block, bearish engulfing, doji, bullish engulfing, breaking structure to the upside, I'm long. You justify because the market knows what you're looking for right now. Okay, it knows what you're looking for right now. So you know how to avoid situations like this, guys. You just wait. You just wait. If price is going to go bullish, we're talking about daily time frame. For me, this is a higher time frame. I usually stick to 15 minute, 1 hour, 30 minute, whatever, some low, depending on my situation and what I'm doing, where I'm going, how often I'm going to be in front of the screen. But right now, just if you just wait, they'll show their hand. The market's going to show their hand. In other words, if it's going to go bullish, it's going to go bullish for a while. You don't need to be right here to make money. You don't even need to be right here to make money. You can get in from right here to right here and make enough money to make you very, very happy. But nobody thinks like that, unfortunately. Nobody thinks, and the market knows that. That's why it puts you in these scenarios on a beautiful Monday morning, ready to start December. You got the Christmas Santa spirit on your side, and they don't give a shit about Santa. They'll still rip your head off. And these are reaction type days. This is why I call it a reaction day, because everybody's waiting for that. Now, just to give you guys a little bit more here, think about what a reaction day actually is, okay? If you're the person that's generating these candles, whether you think that's the composite operator, the banks, somehow, whoever you think it is, if it's your job, right, to create a situation where price is going to go bullish. We all know how price typically looks when it goes bullish, right? We could just find an example right here. Let's just look at this one right here. Price went bullish, right? Bearish, 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 bullish. So what do we have? We start to have what are the indecision candles right inside here. I'm talking about these ones right here, guys. We're starting to have what? Indecision candles, dojis, morning star, whatever the hell they're called. Basically, what you're starting to see is a bearish candle, maybe indecision candle, maybe whatever indecision candle, and then a bullish candle, bullish candle. That's typically how the market reverses, right? But we're talking daily time frame here. So what would be the point, okay? If it took, let's just say from here, this is when it striked, right? Say right here. So that was June 22nd, the 23rd, the 24th, into the new week. So we have about 1, 2, 3, 4, 5, about 5 days. It took almost basically a full trading week to make the turn right here, okay? Full trading week. What business would you have trying to buy right now? I mean, if we're only in day one into the new zone, this is day one. And we're talking daily time frame. So it should be day one, right? Maybe day 2, day 3, day 4, and then day 5, right? Maybe it'll take a whole week to turn. So what benefit or business do you have even trying to buy right now, other than trying to be first, trying to catch the screenshot, and then posting and boosting your little ads on Instagram, and now you're a mentor? There's no If you're trying to make money, that's not how you trade the market. It doesn't matter. You gotta wait. You gotta be patient. Okay, think about the anatomy. Okay, and when I say the anatomy, I mean like the basically the inner workings of this candle, like this little indecision candle right here, this red one. What that looks like on the daily, kind of like this on the daily, on the 15 minute or on the 5 minute, it looks like this. It looks like this. Okay. In other words, it's just a bunch of useless price action. Okay, it's fake breaker structure to the upside, fake breaker structure to the downside. It's liquidity build here, liquidity build here. It's just a buildup, okay, to fuel the next push. But the low time frame looks like this. This is why everybody gets confused. I don't understand. It doesn't work. My strategy doesn't work. It's breaker structure. It's not breaker structure. But in the meantime, how else would you print a daily candle that looks like that? Think about that. I don't know how many 1 minute candles are in a daily candle. I don't know, 2,400, whatever it is. Okay, but imagine how if that was your job, how would you print enough 1 minute candles? Okay, all like this 1 minute candles, so that at the end of the day they look like this. They look like this. That's what it has to look like on the daily. That's what it has to look like on the 1 minute. Okay, it's confusing. It's confusing, and that's because you have no business trading. It is designed to be confusing. Okay, I mean, there's a lot of effort and price action that goes in to a daily indecision candle, daily doji candle, or any of that stuff. Think about the anatomy of a bearish engulfing candle. What would a bearish candle look like on the low time? If this is the daily, this is a bearish candle, what would it look like? It would look like descending price action. But when you're talking about a indecision or a doji or whatever you want to call it, that's going to look like a mess. It's going to break a structure to the upside, break a structure to the downside, break a structure, because it's just moving sideways in order to manipulate and drag you guys into the market. And then what do? They time it beautifully. 8 a.m. Monday morning, everybody's on the computer. What are they doing? You got the one guy arguing that's his break of structure to the downside. He's going to go short. You have the other guy saying that he's going to go long. You have one guy saying that this is the spring in his Wyckoff schematic. I mean, there's so many things going on, and instead of getting involved with any of that nonsense, that bullshit, and trying to be right and being a scientist, you can just wait. Just wait for the market to show its hand. If it's going to go, it's going to go for a while. It's daily time frame. And if it's going to melt, it's going to melt for a while. Okay, and if it does melt, where should you target? Hint, hint. You should target these lows, because why? That's where liquidity is sitting. Because there's people who bought right here, okay, and put their stops at break even, or people who are buying right now. Big banks, remember the banks who for some reason all work together, which makes no sense. But where would stops be? They would be down here. So if it's going to go short, that's where you're going to look to go. You're going to target, right? That's how it works, guys. And again, strategy, all that, none of that shit matters, man. You got to think, and that's what Darkside does. We think. I'm not going to teach you to trade. If you're coming to join our December class that starts next weekend, you're going to see, most of you guys have all taken the same courses, the ICTs, the WWGs, the whatever, the liquidity, scientific experiments, the inducement, whatever the fuck they're called. It doesn't matter, none of that stuff, guys. You got to learn how to think. You got to learn how to be, involved with things before they happen. You got to be proactive and not so reactive. You know what I mean? And it's an anticipation thing. But what you can't do is you can't get caught in stupid situations like this trying to be right. For me, I'm probably going to take the day off. I mean, if you follow my Telegram and you follow me, you know that I've been traveling for some time. I'm in a lot of swing positions. I'm in dollar shorts from around here. So all of my dollar shorts are still fine. I'm not closing them. I close partials on them because they're in here and there's a chance price can turn, but I'm not closing out. I'm not closing my shorts, and I'm not taking any longs, because why would I do that? I'll let you guys do that, and you tell me how it goes. And if it starts going to the upside, that's cool. I'll close more of my partials, and I'll partial out the shorts, and I'll look for some longs. But you got to be patient, man. You got to be patient. Am I excited to be back in town? Absolutely. Happy to be on my computer in my office, ready to take a trade? Sure. But you know what? The market is not giving me that opportunity. So rather than force, I'll just chill, and I figured I'd bring some content to you guys. So slightly different angle, little analysis on the dollar. And again, if you're not understanding how I use this dollar here, look at that previous video about correlation. That's something that's going to help me. So rather than have to go through my watch list on all the majors, I could just see this right now and say, okay, this looks like a day of a reaction day. In other words, they might need to print an indecision candle, which leads to what? What did I just say? Some wild looking price action on the low time frame, which leads to what? No edge for me. No edge, no advantage, and they're not taking my Christmas money this time. So hope y'all got some value, and I'll talk to you soon.